Good evening, everyone. Time for another silver update. This is the 1 hour chart of silver provided by netdayna.com. You can click on the link below. A couple of lines I've drawn in here. The first is this primary support line that we seem to have bounced off of. The other is this primary downtrend line, and it has a couple 1, 2, 3, 4 and now 5 points. So we seem to be coming to a test of this, and we're going to see how this plays out. The other lines I've drawn are the descending volume lines, and you can see we're descending. Normally with the volume situation, the drastic volume that you see enter either comes in on very large uptrends like here. Now this is anomalous because we have a rolling off of the month, but here is a drastic drop based on large volume. So the idea behind this is that generally the silver market climbs on decreasing volume. You can see this climb here. This was actually on falling volume, not very high volume. Now if you think about it, it really makes sense because the players that are involved in the Comex paper market and the Globex paper markets, they're kind of dipping a toe in the water, buying some contracts, but always there is the outlier, this chance of some type of drastic intervention on enormous volume, which is going to blow their positions completely out of the water, like this one did here. So that's always a chance. You can see this breakout here was actually accompanied by a little rise in volume, but compared to the next volume that came in on this smackdown, it was absolutely nothing. So as long as the paper market is manipulated by the shorts, you're going to see low volume buying and then high volume selling. That's just the nature of the beast. So we're looking to see if this downtrend line can be penetrated to the upside to see if this selling is over. You can see that we built a fairly steady, I would draw the channel lines, maybe this one's going to be the bottom, and then we might do something like this for the top. So you can see we're within, right in the middle of this straight across channel that we built for quite a while. It started near the end of January, and then we had that big breakout of it, the smackdown, and now we're back kind of into this channel. So we're going to wait and see where we go from here. We could round down if we throw on the MACD. We still haven't really worked off the bearishness completely. You can see we're coming up, but we're rounding off, so it's quite possible that we could turn around and fall from here and get a decline on the MACD, something like this, which would probably be accompanied by a decline in price, something like that. And that would bring us to our next level, down around 31 or so, if we penetrate this low. So we're just kind of in a wait and see game, and the people who are stacking are looking for another big drop to maybe pile in and buy some more. So I wanted to take you over to the forum, and I have a forum column here on user questions, and this one was designed specifically for questions that people want to be addressed in the video. So I decided that since I hadn't done this, I addressed a couple of these, this future price and spot price. I addressed his question, but a lot of these other questions I haven't addressed. So I'm going to try to go through these one by one. These are going to be fairly brief explanations because I'm just doing them off the top of my head. So hopefully they will be satisfactory. So let's start with the bottom, since these are in order of how people put them on there. And the first question is about inflation and real estate, what do you think the effects of high inflation will have on the residential property market? Now that's actually a very complex question. You have to go back and examine, first of all, what you mean by inflation. Traditional Austrian school economists will tell you that inflation is an increase in the money supply. Keynesian types and the type of economists that we have in the schools today will tell you that inflation is a rise in prices. The primary disagreement is that the Austrians argue that the money supply being increased will automatically be followed by prices rising, because that's what causes prices to rise beyond productivity, while the Keynesians want to talk about all kinds of push and things like that. So obviously I side with the Austrians on this, and the question is going to be, how is the residential property market affected? Now, you have to remember that although they cannot control price rises in the sense of overall prices rising, if they increase the money supply, obviously prices are going to rise. But they can have some control over which prices rise. Now, what we've seen in the property market is that the easy money for real estate has been withdrawn. So we no longer have liar loans, we no longer have the types of loans, and we also have a lot of people underwater. We have a lot of people who can't borrow to meet these requirements. So that money spigot has been turned off, and although we're seeing high inflation in other markets, we're not seeing inflation in the residential property market, partly because it was overbuilt, but also because the money spigot has been turned off. So yes, general prices overall, if you take an average, are rising, and we have a fairly high inflation rate measured on a historical basis, but at the present time that money is not flowing into the residential property market, and I don't think that it's going to flow in that direction for quite some time. Now, the inflation is also not flowing into wages. If you remember, in the 1970s, the Nixon administration instituted wage and price controls. If you notice today, you don't have any talk about wage and price controls, and wages aren't even being talked about. Of course, wages are continuing to decay relative to the inflation rate. So due to the fact that wages are decreasing, and due to the fact that the residential housing market was overbuilt, and due to the fact that the easy money directed towards that is no longer there, I do not see the inflation that we have going forward in the short term impacting the property market. I expect that market to continue to decline. So hopefully that was a decent explanation. The next question is about interest rates. John, what do you think will happen to PM when the Fed will raise interest rates in the late 2014, since we all know what happened to silver the last time the Fed did that? Now, in fact, the Fed has not promised that they're going to raise rates in 2014. They've simply promised that they will not raise rates until then. It's quite possible that we could emulate the Japanese experience and see 2 entire decades, or even going on 3, of nearly zero interest rates. So they could easily extend that again and not raise interest rates. Now, I think what he's referring to is the Volcker raising of interest rates. Now, interest rates were actually rising during the late 70s along with gold and silver. Rates were fairly high on a historical basis, especially real rates, and they were trying to squelch inflation in 77, 78, and 79. It wasn't until Volcker came in with Reagan that they absolutely just crushed the inflation with interest rates. They ratcheted short-term and long-term rates nearly to 20%. So that was a drastic move in interest rates, which obviously, if you move interest rates extremely high, then you can choke off all growth, and that's what they did in 1980. I don't see that happening this time, primarily because if interest rates really even went above 8% at this point, the United States government would be completely insolvent, and 100% of all tax revenues would have to go just towards debt service payments. So I definitely don't see that happening this time. It appears that we're emulating the Japanese experience of just having a lost decade or two. Next question I did already with the futures price and the spot price. Next question is about the MACD. Can you spend some time on how you use the MACD and what works and what doesn't, using it to determine short-term moves in silver? I trade frequently but rely more on averages and Bollinger Band movements with the SLV. I don't use the MACD, but I hear you talking a lot about it. It's a moving average crossover divergence system, and the main thing that you need to keep in mind about the MACD, and I pointed this out before, is that the signals in the MACD are based upon what type of market you're in, and that's how they work. So let's go to the 8-hour. Hopefully I can demonstrate this to you. So you get two types of signals in your MACD. You get your buy crossover, where if you look at the red lines here, this is where you go up into the positive territory. That's when these two lines cross, and when they cross, that's a buy signal. When they cross to the downside, that's a sell signal. So you can see we had a buy signal here and a sell signal there. We had a couple of buy signals here and a sell signal there, a buy signal and a sell signal. So you can see at this point that we're studying these signals during this time frame, we're seeing somewhat of a choppy market. So the price is not really going anywhere, and it's just kind of choppy. The buy signals and the sell signals, neither one is really yielding a lot of profit, and that really goes all the way up to where we are right now. Now if we take it out to a longer term view, obviously silver is in a long-term bull market, so you can see that the signals in this bull market, you've got a series of signals with these tops here. These are sell signals, and you can see that this sell signal here, for example, really wasn't valid in the sense that the move from here to here is very small, but when you got this buy signal here, the move from here to there is very large. But then we turned around and had a fairly large sell-off. So you have to go by which signals are working, and that's going to tell you whether you're in a bull or bear market. We're pretty much in a bull market now, so you want to take the buy signals. The biggest buy signal of all, of course, is this crossover on the weekly. It's only rivaled by this crossover in 2008. So if you bought at 26 or 28 or so when we got this cross, and you believe we're in a bull market, you're probably going to be proven right if this continues up, and that will be a very valid buy signal. And that's the main way you tell the two, whether you're in a bull or bear market. Now, the next question, please explain the dealer and customer vaults in the Comex. Hi, I'm a little confused about the dealer and customer vaults in the Comex, but after nearly a year of following Harvey Organ's blog, I'm a little confused since there is little to no activity in the dealer vault. What is it? In the beginning, I thought that the silver and gold that came straight from the mines went into the dealer vault. Then I thought that someone who wanted to settle a contract would settle it using metal from the dealer vault, and then purchased metal would go into the customer vault, some to be stored, some to be resold. But there hasn't been much activity in either gold or silver dealer vaults. So do people settle the contracts using customer vaults? And if so, what are the dealer vaults for? Now, I don't know all of the ins and outs and the technical details of these vaults and things, but I would remind you that when he's talking about the silver that comes from the mines, that as FOFOA has already pointed out, that only 5% of the silver that is delivered every year, in other words, silver that is stood for delivery, where they actually get the physical and they pony up the money on the futures contract, take delivery, whether it's a producer or whoever it is. It doesn't matter. It could be a manufacturer, somebody who's stamping out coins. The main point is that only 5% of what comes out of the mines is actually physically delivered on the Comex. 95% of all the silver that's used every year either goes straight from the mines to the manufacturers or comes, say, from Perth Mint to the manufacturers. It's traded somewhere else. So I don't attach a lot of importance to these vaults. I think that a lot of what goes on there is probably a lot of shenanigans, and I really don't trust any of their numbers. And next question, gatekeepers of the truth movement. And this is one, actually this should go on the rabbit hole thread. This is one that goes into Freemasonry, the Vatican. This one doesn't talk about the anti-Semitism or the Zionist quote-unquote conspiracy. I don't really spend a lot of time on the conspiracy theories because that's not what this channel is about. But I will say that if you're talking about large groups of secret societies, whether it be the Freemasons, the Vatican, or the Jesuits, or there's a ton of them, the Club of Rome, there's a ton of these organizations that operate mainly in secrecy, and what their goals are, probably they know and no one else knows. And who's behind all of this that's going on, I can't say for sure. But I can tell you this, that none of them are good. That none of these organizations have a good purpose. They may believe that they have a good purpose or that they're serving the world or performing some good thing. But obviously, if you look at how these organizations operate through secrecy and through oaths and sometimes through blood oaths and through secret rituals and things like that, none of these organizations can be any good. And that's as far as I'm going to go on that. Buying silver online. I hate the idea of a paper trail when purchasing online. Is this not a concern of yours? Maybe I'm just paranoid. Also, shouldn't we calculate in the shipping costs when we figure how much premium we're paying per ounce? Thank you for your time. That's a very good question. If you're really interested in purchasing your silver anonymously, obviously the best deal you're going to get is to probably buy locally from your coin shop. The problem with that is that many of those coin shops are going to charge you a sales tax. Now, you can get around the sales tax issue if you get yourself a dealer's license, and you can waive that. But then again, they're going to track some other things, and normally not when you're buying, but when you're selling, you have to give your driver's license and things like that. So there's really no way to buy completely anonymously unless you're willing to go and pick it up on Craigslist and things like that. I prefer to buy my coins online from the main dealers that link their coins to the futures price, so that I can have the opportunity of jumping in on a big smackdown and getting a really good price buying the dips. That's something that's going to be very difficult to do locally. It's going to be something that's very difficult to do anonymously. So I don't worry too much about the paranoia factor. If you are worried about that, then obviously you're going to pursue Craigslist and other things like that. Next question, cartel control and paper manipulation. I'm a convinced silver stacker, and in this race to currency debasement for the long run, I understand along the way that the big banks will at certain times put large short positions in the market to drop the prices we just saw yesterday. These dips in price, from what I have read on your posts and others like Mike Maloney, are considered to be buying opportunities. However, I'm curious to know how long the manipulation of short position ETFs can go for. What will it take for ETFs in the precious metal market to be worthless and or bank shorts to have no effect whatsoever? There must be a breaking point or they would keep prices low forever. I find it frustrating to convince friends and family of the safe haven when all they hear about in the news is how far metals have just plummeted. Well, obviously that's the name of the game, and that's why they do it. So in a sense, you've kind of already answered your own question as to what they're doing and why they're doing it, because they certainly don't want your friends and family to begin stacking physical silver. Now, when it's going to end, obviously if I could answer that question, I would be well positioned and probably very wealthy. I can't say, but I can say that that which cannot go on forever will not go on forever. Many of these things that we cover are the result of economic laws. If you continue to suppress the price of silver, you're just hurting yourself in the long run if you're worried about high silver prices, because of course suppressing a price will cause a shortage, because you'll cause low profitability of the people who pull it out of the ground, and there's not going to be an incentive to invest in mining in the future. It takes a lot of effort and a number of years to bring a new mine online, so ultimately it will fail. The reason it will fail is because we're dealing with economic laws. You can't get around economic laws just like you can't get around the laws of physics. If it were possible for all the governments of the world to just simply print money, then obviously no one would have to work and everybody could just sit back and trade the markets, and everybody would be rich. Now, we all know that can't be the case. So there are economic laws that affect these things, and eventually the economic law is going to come into play. And I think I'll take one more question and then we'll finish up the next time. Do you think we'll have another massive dip? And while that's loading, I'm assuming there isn't any more. Here it is. Hey, Brother John, I was wondering if you think we'll see another dip, not 10% dip, but one even greater than that, so we can all have a massive buying opportunity. Well, of course, it's a possibility. We know that we have big long-term historical support down here around 21 or 22. We did not reach that. We reached the 26 point, and you can see we kind of double bounced off of a point that really didn't have anything there. It just kind of bounced off of it. Will we get a move down to that level? We could, but I would say that that probably has to coincide with a very large financial panic, just as this drop in 2008 coincided with a very large financial panic. Do I think we're going to have that? Certainly not in the short term. I don't think there's any way we're going to see that in 2012, being an election year. As Jimmy Rogers has pointed out, this is one of the biggest election years in many, many years. There's an enormous number of political seats up for re-election, and he fully expects the central banks to be accommodative into the election period. Obviously, the central banks, although they would claim they are not, are somewhat beholden to the current administrations that are in power. So it's in the administration's interest as well as the central bank's interest to keep money loose enough to keep things going. Certainly not to have a tremendous deflationary type panic or scare during an election season. So I highly doubt that's going to happen. I think that's probably why they had to stop silver where it was. It was rallying very strongly, looking to head up into 40 and up past 50. And they needed to do a paper smackdown because obviously they're going to keep the printing presses rolling at least through the election. After the election is over, I would say all bets are off. We could see anything after that point. If you remember the last time, all these things started to come to a head around election time. So that's the viewer questions, and I'm going to address the rest of them tomorrow night or another night. And so we're looking for silver to rally here in the short term, at least to test these resistant lines that we've drawn, and we're coming close up to 1 here, and we'll wait and see where we go from there. And until next time, keep stacking, and we'll talk to you next time.